think there's an awareness out there that, you know what, a bit of hedging in my portfolio with a bit of gold might not be a bad thing. And that, if I'm right, and if we see that strengthen this year as things get scarier, I think that's a real game changer.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for May 6th through May 13th, 2024, while supplies last. First, we feature 2023 1-ounce Silver Krugerrand at $3.10 over spot. We also have 1 10th-ounce gold Canadian maples at $29 over melt. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Lobo Tiggre, the independent speculator, independentspeculator.com. Lobo, thank you so much for joining us today.
Thank you much. It was fun to have an interview with father of Elijah the other day. But, you know, you're the original, so let's rock and roll.
Thank you so much for doing that. Our viewers really appreciate it. We were having some technical difficulties with internet here, so it was great that my dad was able to step in. And hey, you know, he's a better interviewer anyways. So, but we appreciate having you back on here. So I did want to ask you about the gold market because we've been talking about in previous interviews how 2024, you say, is going to be the year for gold. Now, 2023, you had predicted was going to be the year for uranium, and that played out very well. And it's been playing out quite well in 2024 for gold here. We're seeing a bit of a pullback to the $2,300 level from the $2,400 level. But
oh my, $2,300, what will we do?
Exactly, only $2,300. Yeah, where are we right now? And do you anticipate more upside in gold going to the end of the year?
I do, but before I go there, thank you for framing it that way. And it's nice to be getting credit. It's nice that people realize that I was right about uranium last year and that I'm being right about gold this year. And people are accusing me of having a crystal ball or something like that I've got hidden away somewhere. But most people have probably heard this already, but I have to stress for anybody that hasn't, I'm right about gold so far this year, but not for the reasons that you and I, Elijah, spoke about. You know, I'm in team hard landing. I think, you know, when the recession becomes undeniable in the US, we get a monetary pivot. And that was the basis for my bullishness on gold. And that hasn't happened yet. So please don't anoint me guru and think predictor of anything. To be right for the wrong reason is still being wrong, actually, in my view. So far, I think there's a better argument to be made that Lobo got it wrong than got it right. But I'm not just being modest. The other reason for bringing it up, besides please don't make me a guru, because the gurus always disappoint. Right? Sooner or later, the guru will lead the train off the cliff if you believe everything they say. So I'd rather people are skeptical of me. But the answer to your question, though, is that all the reasons why I was bullish on gold when you and I, your father, spoke, that's still on the table. That's still in front of us. So, you know, knock on wood, but if the worst a gold correction can do is take us down towards 2,300, and we're going into all those things for which I'm bullish, you know, recession and Fed pivots, and even without the recession, the Fed, you know, cutting rates because it kind of has to for a number of reasons. All of these things say that, you know, I hesitate to put the numbers out there, but if we go up 10 or 20% from where we are now, that gets us to, you know, another nominal high after another nominal high as going through this year, never mind getting to a real high. So it's kind of exciting. I don't want to, you know me, I don't want to be like Kramer pounding the buy button, but it is pretty exciting to be in a situation where the downside seems limited, in a speculative situation where the downside seems limited. So yes, for all the reasons that probably your audience knows, you know, until they're blue in the face, I'm still very bullish on gold. I see us going into it from a higher base. And one more thing before we move on to the next, and that is, so I was wrong about why gold's up. So why is gold up? And a lot of people saying it's the central banks. And yes, the central banks have been very supportive of gold, but that's been going on since the US weaponized the dollar. So that doesn't explain the hockey stick we've seen recently. In my view, we have a new whale in the gold market besides the central banks. They're still there. right? We just saw the Chinese amount of central bank holdings were just another high. And that is another explanation people are giving, that the Chinese are buying. And there's some data to support this, but I don't think that's the whole story. It's not like the whales show up and say, here I am, I'm the new whale in the market. I think there are still unknowns here, but I have a feeling, this is not a prediction, it's not knowledge, okay? It's my feeling that actually, even in the West, there is a percolating awareness that maybe a little bit of gold in the portfolio wouldn't be a bad idea, a little bit of hedging. I'm hearing more of this on mainstream financial media. People who seemed that they couldn't even spell gold a year ago are now starting to talk about, even just to mention it is kind of incredible, but they're mentioning it like, maybe a small allocation to gold wouldn't be a bad idea, which brings us to, and I know you've talked to Rick Rule about this, his idea of, the 4-decade mean allocation globally to gold in the asset portfolio globally is something on the order of 2%. And it's been down around 0.5% recently. So if gold reverts to the mean, you have a 4x increase in investment demand. And I'm not promising that, but this is my sense. I think this new buyer on the market, it's not one person. I think there's an awareness out there that, what, a bit of hedging in my portfolio with a bit of gold might not be a bad thing. And that, if I'm right, and if we see that strengthen this year as things get scarier, I think that's a real game changer.
Now, this whale you mentioned, might not be one actor, it might be multiple actors, kind of figuring out that it's good to have a hedge in the portfolio of something real. I did want to press you on that because a lot of people, as you mentioned, are saying that the demand is coming from central banks, the demand is coming from China. It seems like, for example, on the retail side here at Miles Franklin, we're seeing slowed demand. Premiums are pretty low, except for some of the American products. And then also we're seeing GLD outflows from there. So I'm a bit skeptical. Is there a lot of demand coming from individuals in the West, or?
Hey, I love that you're pushing back and not just accepting whatever the guru says, right? Yes. So no, that's excellent. Let's start with the GLD. This new whale, and when I say whale, I don't mean a person or even an institution. It's not, the Saudi sovereign wealth fund. It's not that one actor, but it's a class of actor, which is what has me thinking it's really about an attitude shift. And, this perception that maybe hedging was something real and physical, which, by the way, Bitcoin doesn't count as. Sorry. You might say Bitcoin is real, but it's not physical. So we'll leave that aside. But this new buyer, you're looking at the behavior, and the GLD versus the gold dollar exchange ratio tells you that this new buyer wants physical. And this also explains why the stocks haven't been doing as well. You'd think with nominal all-time high after nominal all-time high this year that the gold stocks would be on fire. But this new buyer doesn't want gold stocks. He doesn't want counterparty risk. He doesn't want profit and loss statements. He or she or it wants the security of bullion, that long for which there is no short. And the stories that we've seen out of China, I think, are more recent than the pivot that we've seen in the market or the surfacing of this new whale. So it could be delay. It could be that there's more to the China story than I think. But I'm also sensing just the news flow across my desk. This is why I say this is not a fact. This is my gut feel. My gut feel is that it's not just China. But this buyer isn't going to want, liberties from Miles Franklin or, anybody else. They're big. These are big, deep pockets. So this is institutions, this is brokerages, this could be wealth funds from, sovereign wealth funds from around the world. This is big institutional money. The moves we're seeing, it's not the sort of thing that I'm going to make happen going down to my local coin shop or calling up my favorite online dealers, right? So yeah, I just don't think it would show in the usual places. Now, if I'm right about where we started, the macro outlook and the hard landing, shaking things up, and the inflation at the same time, that stagflationary outlook, that's when we get the average Joe in, and that's when your business should go through the roof. But for right now, these big institutional players, these whales out there, they're probably not going to give you a call. I tried. I put your number on my website, but sorry, they're just looking for bigger settlements.
No, and I think when it comes to, I guess, what we're seeing in the gold market right now, I mean, it is interesting to say that like larger players are making the shift. And you mentioned how it's only a tiny percentage of people's portfolios right now. So when do you think the public, I guess, or the retail investor will finally move into this market?
I suspect it's starting. It's interesting. Like you even will see exasperated talking heads on financial media say, well, what else am I going to do? Buy gold? Like dismissively, like gold is a four-letter word, right? But that they even mention it. Like this was unmentionable a couple of years ago. Nobody even knew what the barbarous relic was. So it's kind of I think, a sign of the time. So I think as we get into this year, and I'll either be flat out wrong or I'll be right this year, not some when, not someday, like this year. And my expectation since the COVID lockdowns has been for stagflation. And it's interesting that we're starting to see those headlines now. And we're like, not to plug this one stock, and I don't own the shares, but just the largest gold miner in the world is Newmont. So when Newmont beat guidance, it wasn't even a great quarter, but they beat guidance. And it was the biggest gold miner in the world. And it was at a time where gold was making headlines. So Newmont was in like the daily rounds on Bloomberg and Yahoo and other places like that normally only care about Tesla and cryptos. It was a big mover. Like they couldn't ignore it. It was one of the biggest gainers on the day. And so that's the sort of thing that gets the mainstream person involved. So I think if I'm right about where gold is going, I think the continuing nominal high headlines will do it all by themselves if nothing else does. But if I'm also right about stagflation, and it won't be just like the 70s, history never repeats it, but it can sure rhyme. And in a stagflationary environment, people will say, well, what worked? And all you got to do is look at any chart of financial assets in the 1970s. And okay, oil worked, but that was with the OPEC lockdowns and for a lot of other reasons that aren't exactly present this time. So I think that you will see not only, the big whales out there, but I think you'll see more mom and pop level institutions allocating to gold. They'll remember the 1970s. And I think the average person will. What has been absent in this bull run really was absent in the 2001 to 2011 and has been absent since 2020 and the new breakout is we really don't have the average Joe here. I remember the 1970s. I was just a kid, but the saying goes in the 1970s, even your barber and your shoeshine boy was talking about gold. Well, I was the shoeshine boy. I was there and I couldn't afford gold. We didn't have digital tokens then. So I bought silver because everybody was in it and I got it. And I understood about inflation. That's a whole nother story. I had, horrible experience with deflation in Mexico. And to hear about inflation happening to the dollar, you could almost say I was panicked into monetary metals. I didn't want to hold dollars. As a kid, I didn't want to hold dollars. So you get that kind of awareness, it really, that's the stuff market manias are made of. And that has been completely absent in the last few rounds. It was gold bugs and maybe some industry insiders that got excited. It wasn't the average Joe. If I'm right about the things that you and I have been talking about, I do think we see that average Joe involvement. And it should be, without getting too clickbaity on you, I think it should be very good for our bullion, which is not a speculation, but also our stocks, which I do speculate on.
Then your perspective on the performance of the stocks and also silver, because obviously the gold silver ratio is still high. And it's been said that there's actually an interesting correlation between silver and the mining stocks, because it seems like those sometimes play catch up. Your perspective on both of those plays right now?
Well, I see them as somewhat different. Yeah, let's separate those. I have an article on the side of my website. It's called Our Gold Stocks Broken? We have a direct look at this. And it's not just historically that the stocks lag. I don't think that's true, really. The go-to names in the space, they respond immediately. Like when we have a V-shaped bottom, as we did in 2020 or in 2008, the the known high, excellent discoveries, the companies that everybody goes to, when the commodity itself comes screaming back, the better stocks move right away, or almost right away. And silver is different. It has that famous issue of underperforming gold at first in a bull market and then more than catching up at the end. So I see these as different mechanics. And I think you and I have spoken before about my Darth Silver mantle and about how I think the use case for silver has visibly changed. The data tells us the market is different, not just evil Darth Silver, but the actual data, if anybody will look at it objectively. And the fact is that, we had a breakout in gold in 2020 and silver never did catch up. We never got that lag at first and catch up in the end part. So that is no longer an unbroken track record. It is now a broken track record. And it's concerning that the broke in the track record is the very last instance, right? So if something has changed, has it changed back? But fear not, dear silver bulls. Even Darth Silver sees that silver is tracking gold very closely, and particularly important. I've been seeing silver track copper more than gold many days over the last couple of years, and particularly until last fall, the last year before that. So last 18 months to 6 months ago, it was incredible how much more silver the chart on a daily or weekly basis would look more like copper than gold. And that was a reason for caution. But ever since the unfortunate events, the new war in the Middle East, silver has been tracking gold much more closely again. And on days where specifically you would see oil and copper go down on economic and news, and gold go up because of the same fear pushing monetary metals up, you'd see silver move like a monetary metal and not an industrial metal. So it seems like the latest war has reminded people that silver is the word for money in many languages. And whatever the psychology of it is or not, the data is telling us that silver is functioning as a monetary metal again. And of course, silver has more catch up to do already. Silver starting from a much lower base. So this time might be different again for silver, but not in that it doesn't catch up, but that it doesn't lag. And in fact, I have put silver back on my shopping list, silver stocks, that is, along with gold. I'm not waiting to see what the recession might do to silver anymore. It has demonstrated for months now that it's acting now. Never mind what might or might be. Right now, it's acting like a monetary metal. So if I'm bullish gold, which I am, then I have to be bullish silver. And by the way, not platinum or palladium. They're not monetary metals, just gold and silver.
Do you see platinum and palladium performing at all when gold and silver rise?
They always, if you look at the charts, like what do you call it? A heart chart, I forget the technical medical term. There's a three-letter symbol for that, not the EKG, but anyway, you look at the lines, right? And platinum and palladium will move with gold and silver the same way. But that, you think the gold silver ratio is bad. The gold platinum ratio, it makes the gold silver ratio look tame by comparison. It barely changes compared to what happens to platinum and palladium. So they will wiggle the same way, but that doesn't mean that you'll make money. And they are industrial metals. And if we are going into this hard landing, then no, you could see gold take off, and the JOTS aside, you'll see the jaws opening in those charts. You'll see platinum and palladium, if not tank, they will lose altitude while gold is rising, if it rises for the reasons that I've given. Sorry, platinum. I mean, there's a lot of people like, oh, platinum's so undervalued. It shouldn't, it's more rare than gold in the Earth's crust. It should be half. Should is a very dangerous word for investors or speculators. Forget should. Look at what is happening. Look what the data tells you is happening now. If you want to make money, that is, as opposed to support some cause.
Now, when it comes to mining stocks, your perspective on when they'll actually start to make a move. I know if you look at the indexes, the ETFs, we've already seen a little move in both like GDX and SIL. But your perspective on where we're going from here and when some of these names are going to make larger moves than they have yet.
Well, we've seen, this is actually an argument against passive investing in the ETFs. If you really don't have time to pick stocks, or you're unwilling to hire somebody like me or the other reputable newsletter writers out there to help you pick the best stocks, then maybe the ETFs make sense. But they're baskets that are defined by Wall Street types on financial metrics that may or may not have much to do with what's going to produce a hockey stick. So it's not surprising to me to see the ETFs underperforming in a bull market. They're like your lowest common denominator. If you can pick the winning stocks, and I'm stressing this because some of those gold stocks have moved a bit, some have moved a lot. Some of the more well-known, well-run companies, some of the go-to names in the space, the ones that aren't having troubles, company-specific troubles, have done very well indeed. They've shown the kind of leverage that's our whole reason for bothering with gold stocks in the first place. Like if you don't get leverage out of the gold stock, like somebody quoted me on Twitter the other day, if gold goes up and your gold stock doesn't, why do you want to own it? That's actually not harsh enough. If gold and the gold stocks go up together, there's still no reason to own the gold stock. It needs to give you leverage. If it doesn't multiply the move in gold, why take the risk of a company that can disappoint on its financials or get nationalized or have the legendary endangered mosquito discovered on its key property? Right? There's just no reason to take that risk if all you're going to get is the same you could get owning gold itself. So you need that leverage. And we are seeing it in selected stocks now. That's good news. And I think we'll see more of it. I think there's been a great deal of skepticism. I have several thoughts on this. One is our gold stocks broken article I mentioned before, that there's good reason to be skeptical of the mining business, the gold mining business in particular, given how poorly the miners turned higher gold last time into higher margins and profits and dividends and that sort of thing. The free cash flow went negative in that big run up to the 2011 spike. Rick Rule likes to talk about this. So why would the smart money invest in this space if their track record is one of failure to deliver for shareholders? So I think it's actually very important that right now, again, not to recommend any of these stocks, but the three biggest gold producers all beat this quarter, or rather, they just announced beats on Q1. If that keeps up, I think that goes a long way to heal the perception that, okay, gold's fine, but gold stocks suck. That's a technical description. And never mind the juniors, on down the food chain. So I think it's very important what we're seeing now. These beats in the gold space, the companies actually turning higher gold into higher margins is part of what has to happen. And the other thing is I think there's been a perception out there that, gold spikes and then it goes down. In 2011, gold spikes and then it goes down. In 1980, gold spikes and then it goes down. So in 2020, gold spiked. And so the smart money thinks it's just going to go down. And they've been waiting for gold to go down. And the stocks have been leading gold down. Except that gold isn't going down, it's going up, right? So at some point, and I would think that has to happen this year. How long can you keep saying, no, gold's going to go down, gold's going to go down? It's been since 2020. We're going on 4 years now of plus or minus $2,000 gold. That's a long time to say, oh, that was just a spike. The next big move is down. And the breakout this year, if anything, says that the next big move is upwards, as well as my macro outlook. I'm not a technical guy. I'm not going to say, oh, the chart says gold is going up this year. I'm just happy that the chart has this breakout that coincides with my macro view, which says gold's going up more this year.
Now, coming full circle, looking at who's buying the gold, we are seeing an interesting thing happen in the Asian market where we're seeing this premium for gold on the Shanghai Gold Exchange, also for silver. Your perspective on that and what this might signal is happening in the gold market?
Well, actually, let me go a little bit sideways to that first before what it might signal. That's a crystal ball question. But I think it's terrific that it's happening at all. I would really when the Shanghai Gold Exchange set up and we started getting live quotes from Shanghai instead of just the US or the London fixes and so on, this alternative gold price data out there. A lot of people got excited. I got excited that there would be price discovery. If there's manipulators on the COMEX, they're not going to be able to manipulate the Shanghai Gold Exchange. But the problem, it just seems like what the Chinese were doing is they were looking at the COMEX and then, adjusting for renminbi. So there was no real price discovery. It was just whatever the West was doing, adjusted or translated into Mandarin, if you will. You looked at it, there was very little divergence. There was no new data coming from China to inform, the West. The Shanghai Gold Exchange did not move the Western prices. I I I'm hopeful that that will actually change this time around. To see divergence in the prices, that's important. That tells us that the markets are behaving differently instead of one just tacking on a fee on the other. And I'd like to see that continue. I'd like to see more of that. I think we'll get, because as I understand it, the Shanghai is a physical clearing market. So it's much closer to the real deal, like what you actually have to pay to get the stuff in your hand. And I would like to see the Shanghai quote become the primary quote. And, London and Chicago, I'd like to see them fade from importance in this market for reasons I think your audience would fully understand.
So you're saying because this is the Shanghai exchange is closer to the actual physical metal, that's a better pricing mechanism?
As long as they don't just copycat New York or whatever they get from somewhere else. Like if that market starts becoming a primary instead of a derivative of the other ones, as long as they're just translating what we're doing over here, it doesn't help any. But if people start buying and selling, like screw New York, forget what they're doing. This is how much I'm willing to pay here. Here's my bar. What do you take for it? Then I think that would be fantastic. And if what we're seeing now with the divergence now is the beginning of that trend, I think that's terrific. I think that will be an important plus for the gold market globally going forward.
Fantastic. Any last thoughts before we let you go, Lobo?
Well, we really focused on the monetary metals. So let me just say, I think uranium in correction right now is a no-brainer. I mean, it's not a riskless speculation. If there's another Chernobyl event or something, obviously that can go bad. But it's the supply and demand there is just baked in the cake. I really like uranium, and the market has been in correction, so there's good opportunities there. I like copper, oil, and other things, but not until after I'm sure the recession has done its worst. So I'm still holding off on other industrial minerals, but uranium is different.
And you see uranium kind of being a bit recession-proof then?
Yes, exactly. It's you can tighten your belt and make fewer trips to grandma's and use less gasoline, but uranium is 24/7 baseload power. It's what keeps airports and hospitals lit up, and you really don't want that turning off. So and the supply just isn't there. Like it's huge swing variables in the uranium market that are very, very bullish for the price. So yeah, I'm you know me, I don't have a big plastic buy button like Jim Cramer, but this is the equivalent of Lobo Tiggre pounding the buy button.
Definitely. Well, it'll be exciting to continue to track this with you, Lobo. If our viewers are interested in learning more, they go to independentspeculator.com and see your insights there. Can you tell us a bit about that?
Sure. There's a lot there. The My Take service is very misunderstood. It's not really a newsletter. It's a database of hundreds of company evaluations. There's a video on the website that you can watch and the free reports that explains it. But the simplest thing to do is sign up for I have a free weekly digest. If you sign up, I promise we won't spam you with advertisements. You get one email per week and that's it. And that way you can see if you like the way I think, how my work looks like, and decide whether or not I could be your due diligence guy.
Lobo, thank you so much for your time today. independentspeculator.com. We'll put the link in the description here. Thank you so much, and God bless.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for May 6th through May 13th, 2024, while supplies last. First, we feature 2023 1-ounce Silver Krugerrand at $3.10 over spot. We also have 1 10th-ounce gold Canadian maples at $29 over melt. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.